Here she comes. That's Fed Chair Janet Yellen pulling up to the FOMC meeting. Of course, we're going to get a statement from her tomorrow. We're also going to get second quarter GDP figures, and we've got a big jobs report on Friday. So is this going to be a week that makes or breaks the market? We are going to discuss it, and we will find out. Big show today. I'm Jackie DeAngelis. Welcome to Futures Now. In just a few moments, we are going to speak to former Representative Ron Paul. We also have our gold bug, Peter Schiff, on the show. But first, I want to get to the traders and break this down. Jeff Kilberg, let's go ahead and start with you on the floor of the CME. We've got Janet Yellen tomorrow. Do you think we're going to hear anything new?
I think we may. You know, here in Chicago, the pits are buzzing right now. People are excited. This is possibly the busiest week of the summer. GDP, jobless number, but Yellen. It's all about Yellen. Will she give us some type of inkling that rates are going to rise a little bit faster? Because we've seen volatility suppressed for so long in currencies, in stocks, and the VIX obviously represent that. But will she allow this volatility to come back and for these markets to normalize?
All right, Brian Stetland, do you agree that it's all about Yellen, or do you think GDP, the jobs number, could have more of an impact here?
I think GDP will be more of an impact here. You know, Yellen's sort of given some sort of an indication of what she's going to do. We know that they're going to cut back on the bond buying program. We know that October's coming, and then we'll see where interest rates go. I think what's interesting is GDP, because obviously the first quarter was atrocious, and people are expecting good things out of these numbers. And I think we need to see those good numbers for the stock market to print 1,900 on the, or 2,000 on the S&P rather, to keep things moving forward in this bull market. We really need to see things continue to pick up, continue to see growth in the market.
All right. Well, I want to bring in former U.S. Representative Ron Paul into the conversation to talk a little bit about the markets, but also to talk about the dollar's reaction to everything that we've been seeing as well. Representative Paul, always great to have you on the program.
Thank you. Nice to be with you.
Listen, you called for the demise of a dollar. You've been saying the dollar would weaken, but with all due respect, it hasn't exactly happened. So tell me what you think you got wrong here.
Well, the dollar is weaker because prices are going up. That's how you measure the value of the dollar. And there's, a lot of prices that are going up right now. And the government and the CPI is actually revealing this. We had a major article in the Houston paper recently because our economy is doing rather well in Houston, but it's 7.5% CPI rate. So the prices are going up, and there's a lot of inflation in the stock markets. I think there's a bubble there, and bonds. How can you get the price of a bond any higher? So I think there's plenty of inflation, but my definition of inflation is a little different than the rest because I think the prices going up in the different areas is a consequence of inflation. Inflation is when you increase the money supply and distort interest rates and cause all the mistakes to be made, and we've had a ton of that. And now they're just thinking, how do we quit this? So they pretend they're going to back off on QE, but they don't lower interest rates. So how do they do that? They have to buy something else because there's nobody buying our debt that's really the amount that needs to be to keep interest rates at, at zero rate. So I think there's a lot of problems out there, and there's a lot of consequences of this monetary persistence that we have.
Okay, well, I think there are a lot of people out there that would certainly agree with you, and they're just sort of waiting for the shoe to drop. It depends when that will be. But I want to touch on a couple of points that you made there. First of all, when we talk about the dollar, we are at a 6-month high. So on a relative basis, we are pretty high. At the same time, you bring up this notion of inflation, and the stock market being a bubble, the bond market as well. Other people would turn around and say, Representative Paul, actually, the economy is growing quite well, and valuations seem a little high, but reasonable. So why exactly do we have a bubble on our hands?
Well, what did they do? Did they forget about the first quarter? The GDP, second quarter? I mean, they don't. The growth isn't there. The only thing that grows is the debt. And just think how much money they have to create value in the stock market. And when it's artificial, it's distorted, it's vulnerable, and it's just looking for the correction. The other thing you have to be concerned about, the measurement of the dollar is also done against a basket of currencies, which they're not exactly the greatest economies in the world either. And we're still in the driver's seat. We still have a big economy, and we still have the military power. So you convey confidence to a currency for various reasons. It's not just the money supply. So, but I think the purchasing power of your dollar is ultimately the test, and that is the measurement against assets. And real estate is just booming in Texas and other places. And if you look around the country, there's a lot of areas like that. But the one thing that we have to remember is when you get false information from artificially low interest rates, that mistakes are made. They're inevitable. You make mistakes even when you have market rates of interest. But when the market rate of interest is so low for everybody, there are a lot of mistakes, and that's why you have the bubbles, and that's why you go through the catastrophe we had in 08 and 09, and I think the conditions are every bit as bad as they were in 08 and 09.
Okay, well, a lot of people would say, maybe the economy isn't growing as fast as we would like it to grow. But at the same time, what we're seeing out of this earnings season is actually not only strong bottom line, but a strong top line. So corporations are doing well. And that kind of goes back to this notion of the stock market and why it continues to rise. So that's sort of the argument in the face of what you're saying. But I guess if we're taking your point of view, would you say that we're due for a crash sometime soon?
Oh, yeah. Well, yes, the market has to correct, and who's going to call it to crash until it happens? No, we're in for a major correction, I think. I think we're very, very vulnerable, and prices of the stocks go up, and they do make profits of some of the companies, but that hasn't helped the people. This is why the people are very, very unhappy. Even I was bragging a bit about Texas doing well, but there's structural unemployment here. Some of the people, they looked at some of the numbers to show that lost their jobs in the downturn. And a lot of them haven't had new jobs, since that time. So the unemployment system is still very, very bad, despite some of the optimism that is expressed, with Wall Street. But that's all deception. I think you still have to see a healthy economy, and people aren't complaining about structural unemployment, which is really insidious.
Okay, well, we're definitely pointing out a lot of the places where we have problem areas, certainly. What do you think is the one key, the one thing that has to be fixed to sort of turn the economy around and keep this market moving forward?
There's not one thing. One thing you have to do is get rid of the Fed, because here we're anticipating what word, what phrase, what hyphen is going to be said so that they can spin that, and the markets will go one way or the other, shifting value of tens of billions of dollars within minutes. That is just a very, very inefficient way to operate a market, to have one individual make one statement and put so much weight on it. In short term, it's very, very real, because people are going to make it or break it, on this interpretation. But that has nothing to do with a free market, nothing to do with building capitalism and savings and the things necessary to have a growing economy. So, but the whole world is like this, so it's very hard to compare ours with others who we might be on the surface doing pretty good. But I'll tell you what, this artificial nature of the monetary system eventually will lead to some type of revamping of this. Why are we hearing so much talk and seeing so many articles about the BRICS and the trades that might be going on with Russia and China and India and all these other countries that they're making? Even Switzerland's involved in trying to skirt the dollar. And one day somebody's going to wake up and say, hey, maybe the dollar is not the king any longer.
Let me shift gears for a moment, Representative, and talk about your son, because he's been vocal about some of the issues that you're bringing up here about the economy and how this country needs to move forward. And he's also been criticized for them. Do you think that criticism is fair?
Well, I don't know particularly what it is. Of course, he's my son, so it's obviously unfair, So, no, I don't know the details of who's criticizing him for what, but that's the nature of politics. And I worry about my critics, and I'm sure he has to pay attention to his.
Well, the Washington Post specifically is asking if your son has a Ron Paul problem. Did you happen to see that?
I saw the headline, but I don't pay a lot of attention to that. That's just stirring up trouble.
All right. Well, let me ask you one final question, because I love getting your thoughts on the gold market. We are going to be talking to Peter Schiff later in the show. Gold having a very tough time this year. The dollar is part of that. Obviously, when the dollar rises, it does push gold down. We are under the 1,300 level, very, very range bound. You have people like Peter Schiff calling for $5,000 gold, and you have other people saying that's impossible. What are your thoughts on gold right now?
Well, I don't call for that, but I don't argue with it either. But timing is the whole only thing. I remember watching gold when it was $35 an ounce, and we thought if it ever hit $100, the world would come to an end. And then $1,000. So, no, it's good. As long as we continue to do this, it could go to infinity, because if people just leave the dollar, who knows what. But that won't happen. We'll finally wake up and do something. But if we can keep this together, if the money managers can keep it together and it doesn't collapse, it's going to keep creeping up. But as weak as gold looks right now, it's up $100 for this year. So
it's roughly, I think, 8% higher year to date. It's not a horrible move for gold, but I think a lot of people were expecting to see a little bit more, especially with the instability that we're seeing in terms of the geopolitical situation. A lot of conflict around the world. You'd expect gold to be higher right now.
Yeah, but if you understand the subjective theory of value, you don't get too concerned about that, because, yes, increasing the money supply weakens the dollar, and the weaker dollar raises the price of gold, and it's a long-term measurement. But you can't measure it. You can't say the money supply went up a certain amount and gold's going to go up.
Right.
So there's a subjective element in that. But long-term, and economic law says that if you keep printing a lot of paper money, the value of that dollar and currency will go down, and most prices will go up, and indeed gold always goes up against that currency. But I don't get in the business of saying in a year or two or three it's going to be $2,000, $3,000, or $4,000, because it really challenges the basic fundamental beliefs of the Austrian school to make those kind of predictions.
Representative Paul, always great to have you on the program. Thank you so much for your insight. Meantime, I want to get to the pits, get straight to the trade. Brian, you're watching the dollar index today. What are you doing with the dollar index? I mean, obviously, Representative Paul is saying he thinks that we are going to go lower, but short term, what's your view?
Yeah, Congressman Paul basically, has a negative impact. I think one thing that's miscalculated is what's been going on overseas and Europe, and the interest rates that you see in the pigs. Portugal, Ireland, Italy, Greece, Spain, those guys, the interest rate trading below our 10-year level has just forced U.S. dollars to flow back to the United States, and that's why you're seeing the dollar gain. Now, I think it's been about a good month that we've seen that trade already. I think it's a little overextended here. So Congressman Paul does have some good points. I think short term, we probably do see the dollar head a little bit lower. I think it's a little bit high here. It's had a nice little run. I'd be looking to short the dollar here at 81.29 if we get a little bit of an uptick. I think it could possibly trade back down to its 50-day moving average at 80.49. Now, I'd put a tight stop here because I think there is a lot of flow coming here into America. I just don't think the volatility in this market warrants a significantly higher dollar right now.
Jackie, I don't want to push back too much on this. I agree with the short-term trade. We are at a 6-month high in the U.S. dollar index, but I think the stock market has been the trump card all along. Stocks want to go up to 2,000. Therefore, I think the dollar index comes off. But unless we see something blow up and the administration does something very forceful upon Russia and these sanctions, I think this trade is safe.
All right, gentlemen, let's go ahead and bottom line the trade here. Brian is selling the dollar right now, the dollar index at 81.29, targeting a move down to 80.49. Since each point in this trade counts for $1,000, this trade risking $500 to make $800.